Can you expand on how the new process for filing a Form 211 will work versus how it works currently?
So right now, in order for a broker to initiate a quote, so really for a company to start being quoted on our market, a broker has to file a Form 211 with FINRA, go through a process of back and forth with FINRA. Ultimately, FINRA signs off on that form, and once they do that, we OTC Markets are permitted to open that security for quoting just for that broker that made the filing. And if there's more than one broker that files a 211 that gets cleared, we can open it just for those brokers for a period of 30 days. After 30 days, it becomes available to all brokers. Going forward, that avenue still exists, right? So it's really that there are two avenues. One is exactly the way it works now. A broker can file with FINRA, go through the approval process with FINRA. Once FINRA clears that, we will open up quoting for that specific broker. The other avenue that 15C211 creates is for us, for OTC Markets, to do that review. There's no Form 211 filing with us. This is the process we were discussing earlier, where a company will come to us. We will work directly with the company to determine whether the information is available, to either have that company come in through our disclosure news service product, or be on OTCQX or OTCQB for a really more streamlined review process. But we can conduct that review. Once we do that, we have to make it publicly available that we have done so and that we believe the company meets the rule. Then any broker can begin quoting that security. There's no guarantee that a broker will, but any broker can come in and start quoting that security. And then we have compliance obligations on the back end as between us and FINRA, but those don't implicate or those don't involve whether the company can start to be quoted. Once we make that determination, the quote will open up.
I would just add that for anybody that's had experience in filing a 211 with FINRA, and in many cases around Reg A, we've seen more recently, but even just generally speaking, that process of back and forth and Q&A, for many issuers, it's, I'll use the word painful, but really the pain is around the timing aspect of it. You know, when will my security be cleared? And if you think about that in terms of, you know, in essence, that's a direct listing with our market, right? When will my security be available to be publicly quoted and traded by my investors? That could be anywhere from, you know, a day to months. What this process allows us to do is really make it a day. We're doing that process in advance of, and again, if I look at it from the context of QX and QB, as we're taking on the QX and QB application and doing the review to make sure a company is eligible, in essence, we're performing that role that FINRA was doing with the back and forth. So that for a company that wants to join QX, we can pretty much say, okay, if you want to join QX on this specific date, that full review will have been done and your company will be eligible for public quoting on that specific day. So it very much streamlines the process and gives us the ability to onboard an issuer in a way that's much more seamless and looks a lot more like the kind of IPO process or the direct listing process on an exchange.